Hello, my name is Brehon and I'd like to welcome you back to the channel, where not only do we talk about great stocks, but we also talk about great books. Listen, I started investing in the stock market in 2006. Now, we didn't have access to all of the social media platforms, all of the news, all of the information, and all of the data that's out there. And so, I've took some risk. I've lost a lot of money, and I've also, made a lot of money. And, throughout the years, I've made a consistent effort to save at least 15% of my income, ensuring that I hit the yearly max. And I think the yearly max for 2020 was a 19,700. So I make sure I get the 19,700 in my retirement account, and I also make sure that those funds go into index funds that are growing at a great percentage. Okay, so again, when it comes to my retirement account, I am real big and real heavy into index funds. Okay, so once you cross over the $250,000 mark, you don't want to be gambling and risking and taking so many risks. You want your stuff in great companies, great index funds that's going to grow 10, 15, 20% per year. Okay, that's how you want to roll once you cross over a certain amount of money. Now, when you have $5,000 or $10,000, $20,000, you may want to take some risk. But as your money grows, you want to start modifying the amount of risk you take. Okay, now you may want to have 50% index funds or 50% in high risk stocks. Okay, but again, that's for a whole nother video. Didn't want to get off on a tangent there, but again, I really love index funds, and I do love some individual stocks, growth stocks. Okay, I do love growth stocks, and I do love dividend stocks. I was in the dividend paying stock for a long time, and then I was getting up to $15,000 a year, and I stopped. And that's going to be another video why I stopped receiving my $15,000 in dividends. Okay, I'm going to do a video on that. But again, I do like these growth stocks, and again, social media has given us access to so many different people. And these people are searching so many different sectors and finding so many hidden gems. Well, I can't. I've always been a PlayStation owner. Okay, I've always owned every PlayStation. Basically, I don't play the PlayStation that much anymore, but for some reason, I still own it. Have a 10-year-old son. Hopefully, he'll get into playing the PlayStations, but he's really not that big of a video guy. But anyway, there's this company. I posted videos about this company before, Immersion. Okay, so if you're unfamiliar with Immersion develops the technology for all of the PlayStation 5 controllers. That vibration and everything that you feel that goes on inside of that PlayStation 5 controller, that is Immersion Technologies technology. Okay, now they will begin receiving a royalty for every PlayStation 5 controller that's sold. And remember, there will be at least 2 controllers for every PlayStation. All right, and think about people that like to get backups, and people who like to play the 4 and 6, 8 player games. So again, that's gonna be a lot of PlayStation 5 controllers sold. Okay, and this is a very, very small company. This reminds me of AMD when AMD was around $2 a share. Now, I know a guy, Asian kid. He was watching the PlayStation 4, I think it was the PlayStation 4, earnings day. And they talked about how AMD would be putting the processors into all of the PlayStation 4s. So this Asian kid who saved $50,000 up, took his $50,000 and put it all on AMC when it was at $2 a share. And then he eventually cashed out for $600,000. And I can see an opportunity here with Immersion. Now, Immersion isn't $2 a share, but it has the potential for some phenomenal growth based on a couple of things. And I'm going to talk about those things in a few minutes. But here's an article from Immersion. So Immersion announces preliminary results for fiscal fourth quarter 2020. Immersion Corporation, the leading developer and provider of technologies for haptics, announced today preliminary results for the fiscal fourth quarter ended December 31st, 2020. Based on the preliminary financial data, Immersion expects fiscal fourth quarter revenues to be between $10.5 and $11 million. Again, this is a very, very small company. GAAP operating expenses to be between $5.6 and $6 million. That's operating expenses. The net income is to be between $7.5 and $8 million, or 27 cents and 29 per diluted share. Non-GAAP operating expenses to be between $3.5 and $3.9 million. Non-GAAP net income to be between $7.5 and $8 million. All right. Now, let me see. Jared Smith, Immersion's interim chief executive officer, commented, "We finished the year with strong momentum in our business, delivering sequential growth while continuing to be innovative. I'm excited to capitalize on this momentum and our recent achievements, including the recent success of the DualSense controller for the PlayStation 5 and our contribution to its haptic capabilities. I look forward to providing more comprehensive update in our upcoming earnings call." Listen, this is going to be phenomenal. This is going to be phenomenal. I'm telling you, I can see it. I can feel it. And when we take a look at IMMR, this is a 20-day moving chart. This is a chart, and I have the 20-day moving average. So we crossed over the 20-day moving average, and we just been moving up beautifully. Okay, we'll come back and touch the 20-day moving average, move away from it, come back and touch it. We're just bouncing off the 20-day moving average. Listen, if you're a trader or if you're an investor, this is what you like to see. This is what we love when we take a look at these companies. All right, nice, steady upward trend, occasional pullbacks to the 20-day moving average. We're going to bounce off that 20-day moving average, and we're going to keep riding up, keep trending up, keep going up. That is what we love when it comes to stocks. Okay, but let me see here. And something else we really need to take a look at is the outstanding shares. Now, you probably have seen this video before, but again, outstanding shares, 29 million. I think when I did the video, a few videos back, I think they were around 35 million. But right now, as of right now, there are 26.9 million shares outstanding. Only 20 million shares float. So that means there are only 20 million shares of IMMR that are circulating to be bought and sold. Man, that is minuscule. That is minuscule. So as we continue buying up these shares of IMMR, that stock price is just going to skyrocket. And so what's going to end up happening is shares outstanding 26, they're going to have to go to 52. They're going to have to go to 104 million shares outstanding. They're going to have to go from 104 shares outstanding to 208 shares outstanding, or they may do a 4-to-1 split or a 5-to-1 split. This is a small company, and the more shares they have in the future gives us opportunities to own more shares, right? Let me back up a little bit. The more stock splits they have in the future will give us opportunities to own more shares. Okay, so this is the part of the company you want to be in. You want to get in early on the ground floor. Only 20.8 million shares afloat. That's minuscule. That's absolutely nothing. A company like ARK Invest or hedge funds or some of these financial institutions, they can come in and buy 1 million shares, 2 million shares. So this is a great opportunity. This is where you want to be. I highly recommend that you add some IMMR to your portfolio. If you don't want to buy shares, you can buy some call options. Okay, 2022 call options are at a great price. March 19th call options. Okay, again, we're gonna have the meeting. I think the meeting is scheduled between the 2nd and 3rd week of March. All right. So again, after that phenomenal meeting, I think we're gonna do well. All right, but a lot of times we got to be careful when we have huge run-ups like this. Sometimes the money is made during a run-up, and then after we have good earnings, we may come back some. But I think it's going to be different this time because this company is so small. It's so small already. So people will continue adding shares, building their positions, and this stock will continue going up, up, up. And eventually they're going to have to do some stock splits, and that's going to be better for us in the long term. We're just going to keep making that bank. We're going to keep making that money. And listen, if you have some shares, I want you to hold long and strong, baby. We long and strong on MMR. Okay. Listen, I hope I added a little bit of value to you. If you did like this information, hey, leave a like. If this is your first time checking me out, hit the subscribe button and keep coming back for more wealth building information. Peace.